Mana coin is going ham, right?
Is MA going crazy? Account challenge, so I'm not really gonna look at any charts or anything like that, but I'm pretty sure mana coin. I think it's going crazy. Oh, actually, I think I have to. Alright, I was on a bad connection, so I had to switch over. I mean, you never know, man. All these crypto, they're crazy. Anything could happen. Hard to say. Extremely hard to say. So the 2K account challenge. 2K account challenge is an earning edition account challenge where we're setting up a lot of spreads, whether it's calendar spreads or vertical spreads. And the reason I wanted to do this video was because a lot of people were asking, a lot of people have trouble starting the spread. So I didn't want anybody to get, any more confused than they already are. And I wanted to kind of explain how to open the spread, how to close the spread, and kind of give everybody an idea of how, how it works in general. Because if you guys don't know how to play and you don't know how to open the spread correctly, or you don't know how to, how to like close the spread correctly, you could potentially lose a lot of money. What's up, Hot Slang? What's going on, B-Chan? What's up, CG? Yeah, it's a little late session today, but I just wanted to do it because I kind of told you guys I wanted to do something over the weekend, but I was really busy, so I didn't have a chance to do that. So I figured, wanted to record at least a late session on it and just kind of go over some of the basic of the setting up the account challenge. So let's see, let me pull up some of the plays we had started recently. Let's say for Riot, right? This is, I'm gonna start writing on here as well, whether they're gonna be vertical spreads or whether they're calendar spreads. So Riot was, actually, is that a calendar? Yeah, that's actually a calendar. That's a call calendar. That's a calendar play on the call side with a C. So I'm gonna start labeling them a little bit better too, just like how we did today. Like SPG is a vertical put spread, Pfizer is a calendar spread, and then Riot also was a calendar spread. Just give me a little bit more time in case everybody isn't here yet. Just want to make sure we have as much people here as possible, so this way we can kind of explain things a little bit more and everybody has a chance to understand it. Oh yeah, that happens sometimes, man. And there are some exchanges where you could, you can just tell them what you want to do and they'll let you pick the strike as well. But for some of you guys that are on Robinhood or Tastyworks and you don't have the opportunity, you could you have to manually set up, but you can do it all at once. So the difference between when you want to do a calendar spread and when you want to do a vertical spread is, so for example, let's just go over the basic description here, right? So a calendar spread is when you think the play is gonna be, so in this case, let's say if we're looking at one of the earnings that's happening this week, right? Give me a second. Let me pull up the earnings calendar. So let's say we're looking at the earnings for this week, and we have Pfizer for tomorrow, right? And if I think Pfizer is gonna make a pretty flat move, so this is Pfizer. If I think Pfizer is gonna make a pretty flat move, because it's kind of within this range, and if I think the max move that they can make is up to $45, and if I think the lowest move they can make is around 42 here, you know, or maybe even here, then that's when I would open a calendar play. And let me show you how that would play out. But you ideally want to pick the range. So if you think it's going to 45, then you would open a $45 call calendar play. So what the calendar play is, you're selling the strike on the front end of the month. So you would be selling the November 5th strike, and it would tell you here as well, you know, you're selling the November 5th, right? And you're buying the November 12th. So if I'm leaning a little bit neutral bearish, right? Then I want to sell the 42s because I think, you know, we can just be stuck in this range for a while, despite how great the earnings is. I think they could just be stuck here, right? If I think they can be stuck here, then, and the stock price is 43 and I'm selling the 42, for the next few days, as long as it remains between this 42 to, you know, $40 range, I'm making money. I'm doing okay. But the way the calendar play is, since we're selling the one that's like, you know, expiring this week, and we're buying the one that's expiring next week, right? Then the front month one that's gonna expire, it's gonna get burnt away from data. It's gonna get burnt away from all the premiums in there, right? That's making that's adding to the contract premium. So they're gonna lose everything from IV. They're gonna get IV crushed. That's one thing that we're gonna bank on too in terms of earning plays, because IV is a little bit higher. So I'll show you what I mean by that. So like, let's say PFE for Pfizer, right? So you can see like the implied volatility here on Tastyworks. It shows you that the November's implied volatility is 63.9%, whereas the November 12th is 45%. So once that earning happens tomorrow, that 63% is gonna get normalized and it's gonna get crushed, and it's easily gonna come back to somewhere around the 45% range. And even this 45% could potentially come back to like the 30% range, right? So as that IV gets crushed and we get closer to Friday, then if the stock is worth like, you know, 42.50, the premium as of now, the premium for that is like 61 cents. As we get closer to that date, the premium is gonna be next to almost nothing. So as that premium gets lower and lower, this one, the premium is going to be worth more if it's moving in that direction. So we're going to make money. But even if it doesn't, you know, worth more, it doesn't go worth more, at least it doesn't get burned as bad. So we're still going to make money. So that's on the calendar, right? Now, the other one that we want to do is the bull spread. So this is a bull spread, actually. This is for November 5th. It's actually not a calendar, this is a bull spread. I don't know, smoke in there. So now we're gonna go over the call spread, which is also bull call spread, but you can also, it's also called the vertical call spread, and it's usually a debit position. So when you're buying this position, you're opening a debit position. It tells you over here, net debit. That's how much you're opening to pay for that position. And when you're closing, it's gonna be a net credit position, because you pay on the way in, you're gonna collect credit on the way out, as long as you're moving in the right direction. So we'll go over how to calculate the profit and stuff a little bit later as well. So for this Riot play, what we're looking for right now is for the move from $28 to $30, right? So what we're doing is we're buying the $28 contracts and we're gonna sell the $30 contracts, okay? So we're buying the $30 contracts and we're selling the it's a $28 contract and we're selling the 30, and it's only gonna cost us $60, right? That means we're only paying 0.60 premium. But if we just bought the 28 outright, it would cost us $1.20. You know, it costs us double that amount of money, right? Or if we bought just the $30 outright, it would cost us $60 as well. But sometimes if the move doesn't happen fast enough, this contract is gonna get burned more and more, right? We're gonna lose more and more money on this contract. Whereas this contract, we're gonna lose some money, but if it's in the money, we're not gonna lose as much. So eventually this is gonna burn out and it's gonna end up paying for all the premium that it costs on this. So let's say if this move takes, you know, anywhere from now to Friday to happen, the closer it gets to Friday, the more money it pays us. So in both of these spreads that we're doing, we're burning premium, we're burning IV, and those things are in our favor. So you generally want to play these when the volatility is very high on the stock. You generally want to play these when there's a lot of premium to be burned on the stock, so you're not paying the additional fee to take these plays, because you never want to be paying additional fees to be taking these plays. So what happens if I buy the first week and sell the next week? Well, that's what we're doing here. So if you're buying the first week and sell the next week, that's a calendar. If you're buying the same week but you're selling one call strike lower and the higher strike, that's a vertical spread. So that's the difference between those two. One of them is, you know, having the same expiration but two different strikes. The calendar is having the same strike but different expiration. So we're trying to collect premium on these and hoping that it moves in our direction. That's how we make money. And like, you know, everybody knows, if you guys been in the market for a while, you know the biggest scam out there is paying premium, right? Tell me not. Like, how many times have you guys bought a strike contract, you know, a strike for a position, and it starts to move toward your direction, but it took so long that by the time it did move into your direction, you completely got wrecked. You lost all your money because you were paying an extreme premium for that play. Have you guys ever experienced that? So, you know, if that's something that you guys experienced before, and then that's why you should be doing these spreads, so you don't have that issue. So the other question that a lot of you guys have was, how do you determine when to take profit, where to take profit, and how much you should be selling the contracts at, right? So that was just a little bit of the basics of going through the spreads. So I'm gonna go over the contracts. So on option strat here, every time I post a trade, I'm gonna put the option strat link here as well if I could. But even if I don't put it here, even if you don't see it, it's usually going to be in the messages. I'm always going to post it in the account challenge message section, so you can always find it there. And if you go there, you'll pull up and you'll get this link, right? And it'll tell you exactly how much you can sell the contracts for. So there's multiple ways to calculate it. You can either click on the contract value, or you can click on the profit and loss area and do the math yourself. If you click the contract value, then you can figure out by here. So let's assume that so initially when I took this play, I was extremely bullish on Riot, right? I thought that Bitcoin over the weekend could break, you know, to new all-time highs because it was consolidating a little bit here and it was making that move, but now it's looking a little weak. Now we're not sure which direction it's gonna go. But originally on Friday, I thought Bitcoin was gonna make that move up to 67K, and if it had made that move to 67K, with the stream, I don't know why I'm keep getting connection issues, having a little lag here. But you know, right would have moved up to, and the chart setup, it looks kind of bullish. It looks like it's ready to explode. Moving up would have been the move to like 3150 in a way. So let's say my target is 3150 actually, right? 3150. So 3150, I got in the position for $60. If it hits or 0.60 cents, right? If it's 0.60 cents and it goes to 3150 by Tuesday, if it hits that price mark by Tuesday, the contract price should be 1.56. That's what you could potentially set it for if that's your target, right? Now, if I'm gonna be, usually I want to be a little bit generous. I want to set a target, you know, a little bit lower so that I'm not like, you know, I'm not missing it just by a hairline. So let's say I'm gonna set price target at $29.90, even though I think it can hit $31.50, right? But I'm gonna be generous. So even if it hits this point, you could potentially turn the contract from 0.60 to 1.19. So you can set your sell order at 1.19 over there if you think it's gonna hit $29.90 by Tuesday, or if you think it's gonna hit, you know, $29.90 by Wednesday, where it gets a little bit more premium burn data and all the other stuff and IV crush and stuff. It would get to, you know, $1.25, and then, you know, by Thursday it'd be $1.34, and by Friday it'd be like $1.61, and potentially even like $1.90, you know, by market close, or even close there if the option liquidity is really there. But it's really hard to get fill in this last part. You could usually get like 10 to 5 cents close there, but usually it depends on the liquidity of the whole chain in general. So that's how you would calculate the P&L based on where the stock price is and things like that. So that's one way to calculate it. The other way to calculate it is just take this, add this, right? So if it's 60 plus 59, you know, that's 119. 119, you know, move 2 decimal over is 1.19. That's how much the contract should be worth. So that's one way to calculate it, you know, based on the current price of the stock and that price. But me personally, I always calculate it by where I think the potential movement is going to be. So if I think the next resistance at 3150, and I think it's going to get there, and I want to sell, you know, I want to be a little bit safe and want to sell it around $30, then this is where I would sell it at. I'm not sure what, I don't have a Tesla play, so I don't know what play you guys are doing with Tesla. It depends on what kind of spread you're doing and what kind of position you have. So if you're doing a spread, your max profit is always going to be capped. But if you're doing a naked position, if you're doing a naked position, you could have unlimited loss, you know, or you can have unlimited profit. It depends on what direction it's going to move. Yeah, but I'm looking at specifically this Riot spread, so I'm not sure what spread you are specifically looking at, but this is the specific position I'm looking at. So that's a little bit, you know, into where to take profit, how to calculate the contract value, you know, P&L percentages and stuff. You know, some of you guys might just be like, hey, I want to be at 100%, you know, that'll be it. So that's kind of a little bit into where to take profit. Hopefully we covered 2 of the main points that I wanted to cover that you guys were having trouble with. The last thing I probably want to go over is just the basics of setting them up on Tastywork. If you guys have Tastywork or if you guys have Robinhood, it's usually pretty similar. Let's say you want to set up that Pfizer play that we talked about today, right? So over here, the Pfizer play is sell the 11.05 expiration and buy the 11.12 for 42.50 to set up the calendar, right? So what you would do is you would go here, and then you would click here on the bid side. If you're on Tastywork, you want to click on the bid. So click on the bid side to sell the position, and then, you know, click that, click sell the position on that side, and then you minimize that, and then you go over to the other contract for November 12th, and you click here, and then you set up to buy the position, right? Oh, since I already have the position, it's a little bit hard to set it up, but let me set up on the lower strike actually. So let's say I want to set that up, go here, click on that to select it, and then I move to the November 12th side. Then I click here, same strike, and I click buy. And then if I want a little bit more quantity, you know, if I want to set the limit price, I can set it. Usually you want to follow the middle. You move up a little bit more, click review, and then it'll tell you that, you know, confirm that you're setting 2 Pfizer calendars and you're selling the November 5th and you're buying the November 12th, you know, and it tells you the strike and stuff, and it tells you, you know, how much cost it's gonna be for this play. So in total, it's gonna be $30 plus transaction cost. So it's gonna be in total about $34.49. And then you send the order in, and bam, that's it. That's pretty much on how to set up the order. And then when you want to sell the order, you know, you go to Pfizer's. Let me see. Go here. You select those two, and you click close position. And then, you know, you tell them where you want to close it. So let's say for Pfizer, we were looking at it and we think it's going to move to our direction, right? We're probably not going to take profit until like Wednesday, because that's when we can possibly double our money. So let's say on Wednesday we're looking to double our money, right? We're looking to sell at like 0.36. You know, let's move that to one contract. So let's say we want to sell from 0.14 or 0.15 to 0.36. Then we just come back here and we set the order in for 0.36. We set a good till cancel, and it tells you how much profit you make, and that's pretty much it. So it's pretty simple, very easy to set up. So that's kind of that. Let's see, what else should we go over? So we got like 4 or 5 minutes left. The last thing I'll go over is just basically how we're setting it up in general, like how am I finding the plays and stuff. So I usually look at the calendar here on Pfizer, and then sometimes I do like, you know, investor relations. I look into the company and I put in investor relations in the ticker symbol for Pfizer. Yeah, if you're doing the calendar, you believe it's going to be pretty flat. So once you go to investor relations, you can see like all their presentations and stuff. And ideally, what you want to look for is you want to look for like you want to look for their full year guidance. Or sometimes the Q4 guidance. So like over here. So if you find their Q4 information, and they usually tell you how much money they think they're gonna make for the year, you know, and they'll guide their revenues and stuff like that. So like over here, they tell you here, raises full year 2021 guidance to a range of $3.10 to $3.20. So then from that, once I get that number, I go back and I calculate, you know, how much they make so far. And I'll kind of have an idea whether they're going to miss or they're going to beat this quarter as well, just based on that a little bit as alone. So we'll go back here. Let me see if I can find Pfizer's earnings. So last quarter, this is Q1, right? For Pfizer, they were 93 cents as opposed to 78 cents. So that was a pretty good earnings for them. That was on May 4th. So they had a spectacular earnings on May 4th. Had a pretty big move. It had a pretty big move that day, up 2%, but didn't move much and just kind of consolidated for like 2 days after that and just kind of stay in that range, right? So if that happens, they end up staying that therefore is on unusual activity to see how that looks like. go here, and now set up for the month, the trailing 30 days. And I usually look through like the most expensive contracts to see, you know, what position people are taking and what they're planning to do. So you can see somebody selling like a $45 put for December 17th. So that's kind of a neutral play. They don't think it's gonna really move above $45. So that's kind of where they're choking in that, you know, in that range. I'm just expecting it to be a little bit worse than that. So then you have some people selling calls at $33 for 2023. The only reason if somebody would sell a call under the strike price of the current stock price, you know, the underlying stock price is around 41 when they sold the $33 calls at the bid. That means they think the stock could potentially fall to 33. So they want to lock in as much premium as possible. So that's the only reason somebody would sell that. So then you have people selling like $45 call spreads, which also means that they don't really think it's going to get past that range. You have people sweeping the $43.50 call puts at the ask. So that's pretty bearish as well. So there's a lot of bearish positions. You do have some calls at 44 and over. So which is also possible. If it breaks over 45, it could get really bullish. But if it doesn't break over 45, it's gonna be choking or pretty bearish in that $40 to $45 range. So these are just some basic stuff that I look into before I set up the play. The other thing is like how much the stock has grown compared to last year. So like if we're looking at Pfizer as an example, you know, let's say last year's stock was trading at $33 or $34, and we're indicating a growth of, let's say 3.2 minus 2.2, right? 2.2, like 45% growth times $32 puts it around $46 for the year. But the full year hasn't finished yet. We only have Q1, so you know, possibly by the end of like Q4, which is two, 3 more quarters away, they could potentially be worth around 45 plus, as long as they continue to meet that earnings per share guidance and go in that direction. But that's pretty much it for today. You know, for the basics of setting it up, figuring out the guidance, year-to-date price movement, option activities, and sometimes, you know, if there's economic and supply chain issues affecting the stock, and you know, of course, sector movement as well. Like let's say if we're looking at sector, like other companies that are in the industry, like MRK or like MRMA, which has been kind of pretty bearish lately, right? MVS or even J&J. So J&J had earnings last time and it really didn't move much. So I would kind of compare Pfizer to J&J a little bit. I would say they're kind of similar in that sense, and they just kind of choke around in that range and came back down. So that's kind of what I'm expecting for Pfizer. But that's pretty much it for today. I'm going to end it here. I hope that was informative. I hope that could give you guys a little bit of understanding of what we're trying to do and how to open the plays, how to close the plays, and you know, give you an idea how like these plays can benefit in terms of earnings or just, you know, saving money on the premiums, man. But that's pretty much it. Was there any other questions you guys have? Hey man, I'm glad I could help. Like honestly, at the end of the day, like if you guys want to become better traders, you want to be consistent, you should definitely be doing more spreads. But you're not gonna be making a bunch of money, you know, because it's limited in terms of directional move and you're limited in price. But you have a defined risk and you're not playing like it's not the market maker against you, you know. Yeah, this should be recorded so you can find it on like YouTube or Twitch, and maybe we'll post a link afterwards so this way anybody else that missed it and didn't see it would be able to take a look. Oh yeah, 100%. Spreads are definitely way safer. They're more defined. They're way cheaper, and you can play with a smaller account and grow your account as long as you're making like really good guesses, and you're making the right guess more than the wrong guess, and you'll get paid. But yeah, that's it, guys. Take care and have a good night. Gonna end it here.